Good morning. Welcome to the live stream. In this live stream, we're going to take a look at stocks, the best stocks to look at today. We've got some earnings that were announced with some retailers. We've got some stocks that have been on the move. Would be really interesting to take a look at. And we are in a market that's beginning to get maybe a little too interesting with some big caps selling off substantially. And we'll see if we're going to continue that big sell off today when the stock market opens in a half hour, or if it's going to rebound, or if it's just going to go sideways. We have big news coming up on Friday, so I'm sure the market's kind of has that on its mind, where the chairman of the Federal Reserve is going to speak and talk about the economy and talk about what they expect to do with interest rates. But we're investors. We're looking for opportunities. So bad news is sometimes good news for us. If stocks sell off ferociously, I actually get my shopping cart out and I start buying stocks and try to take advantage of it. So with me today, it's great to have Daryl, who's going to do I'm going to do fundamental valuations, and then he's going to do technicals and speak about that part of a stock. How you doing this morning, Daryl?
Doing wonderful. Hello, everyone. Good to be here.
Yeah, and I've really enjoyed streaming with Daryl. I think we have two different points of view, but I think we cover companies and stocks more holistically, and I think it's a really good combo. So if you haven't already subscribed to Daryl's channel, I think you'll be a better investor as a result. Take a look at his channel and watch his videos. They're excellent. You'll learn a lot. Looks like we've got some people on the stream already. Thanks, everybody. I know in the United States, it's good morning. In Europe, it's good afternoon, good evening. And I appreciate everybody joining. Looks like Shadow Guy is on. Man, is he active? Selling puts, looking toward the day. And the stock that's been rallying lately is NVS. Wow, interesting. What is NVS? Take a look at that later. So we had kind of some stocks in mind that we can kind of get our kind of juices flowing, and we could start with some earnings that came out today. We had a good number of earnings released this morning. TJ Maxx, the discount retailer, announced. Lowe's, more of a home goods retailer, and yesterday Home Depot announced, and they traded up. Investors were seeking safety yesterday. As you saw those big caps sell off, they were going to a safety stock, and Home Depot certainly is that. Analog Devices, more in the semiconductor. Target, Estee Lauder. I think this one's interesting for a couple of reasons, but one of them is Michael Burry's a big investor. I like Michael Burry. He's really interesting. And I'm curious to see, what does he see in this cosmetics company? I'm not a beauty investor. So we'll take a look at that. Baidu over in China, and then FUTU Holdings in China. So we'll try to get to this list. Now, we have a set of stocks in mind, but I love talking about the stocks you want to talk about. So if you're out there and you're like, I'd love to talk about a particular stock, put it in the chat. And if you're a member, it's free of charge. If you're not a member, a $5 super chat, and we're off to the races. We'll take a look at each stock. We'll do a fundamental analysis. We'll do a valuation. We'll look at the technicals. We're going to circle a stock and look at it from different perspectives. Looks like John is on. Michael Burry did sell part of his EL position. And interesting that in the second quarter, Michael Burry sold all his stocks except for Estee Lauder, and he doubled his share count into Q2. He did sell, I think he had like 200,000 shares. He sold 50,000 shares of Estee Lauder. So he did lighten his share count, but it still remains a pretty substantial position. And it kind of is an oddball. He's not afraid to invest in industries that are kind of oddball industries, or maybe not the most attractive industries. He's more of a, hey, it's more important when I buy and the price that I'm buying at and the value I'm getting versus, having a a carefully curated list of stocks where you're in the exact industries you want to be in. So I totally get that. So we'll take a look at it. Santorio, you're buying more sales for us. Can't argue with that, sir. I'm doing the same. Good to have you. Thanks for getting into the chat. All right, so let's get going. Let's get going here. Let's take a look at a stock. And TJ Maxx, the discount retailer. And I will admit, I shop at TJ Maxx. And these guys, what's funny is luggage. They have a really good luggage section to their stores. Whenever you need luggage, these guys might be a good place to look. They have certain categories of products where you get so much value. It's pretty darn good. My wife really likes their stores too. And they oftentimes have better selection than if you went to a Macy's. I shop at Macy's as well, but it seems like TJ Maxx really understands what's hot right now, what's popular, and they put it on their floor. These guys are up 4.4% in the pre-market. Market cap's $150 billion because they are, really focused on making money and carrying inventory that's going to sell. Revenue is $57 billion. PE is 31. Forward P is 29. Strong buy, only discounted by 5%. They pay a dividend, although a small one, 1.26%. Year to date, this one's working. It's slightly beating the S&P. And for the 1 year, it's doing okay. 5 year, getting the job done, up 134%. That is getting the job done. Let's see if they've loaded it. Yeah, they loaded the nice job stock analysis. Somebody is working 24/7 over at Stock Analysis. They updated the earnings they just released. So it looks like they're growing at 7%. That's a pretty good number, a pretty big number, I should say. $14.4 billion of revenue, growing at 7%. That looks really good. Looks really good. Let's take a look at their profitability and cash flow. So really nice to see that they've grown their cash flow over time, taking it from $3 billion in 2019 up to $4 billion in the trailing 12 months. That's really good. And they're a retailer, discount retailer. So they're not going to have, margins like NVIDIA, but they have gross margins of 30.5%. They have grown them a little bit. You see how they've grown. That looks good. Looks really good. So they are a good operated business. These guys, I have respect for them because they're operating in a business where you have very little room for error. You have to be a good operated business because you do not have big margins to fall back on. If you make big mistakes, you're going to pay the price. 16 analysts cover the stock. They think it's discounted. Consensus is that they're discounted. And they're pretty much kind of in within a range where they're kind of together on this stock. You're not going to get hurt with this stock. I think it's going to do what it's supposed to do. It's growing earnings per share nicely. Real nice growth in earnings per share, growing faster than revenue. So they're expanding their profits. As the economy, if the economy slows down and the consumer is under a little stress, these guys do well because, hey, I'm not going to go to the full price, store, or maybe the specialty store. I'm going to go to TJ Maxx and try to find something at a better price. This company tends to be a recession-proof kind of stock. And even in good times, people like shopping there. Again, I like shopping there because I'm not a big shopper, but when I do need to buy something, I know I'm getting a good bargain at TJ Maxx. So these guys will be performing fairly well in most cases. So really solid stock, a consistent stock. And let's send it over to Daryl and see what you're seeing from a technical perspective.
Well, this is the intraday. And like you mentioned, they are up in the pre-market. So it looks like they closed yesterday at 134 and they're currently sitting around 140. So that's what it looks like in the pre-market. And then if we switch over to the 1 year, TJX, that's what we should be looking at. It looks like they're going to surpass the all-time high from May the 19th, and that was after the low. They actually hit their low back in March. Most were hitting it in April the 7th and the 9th. So that's kind of interesting. Are they impacted by tariffs? I know they sell apparel, but
I would say yes.
don't they buy do they buy it direct from imports, or do they buy overstock stuff from some of the primary
Both.
retailers?
Both.
So maybe
Yeah.
they have a little less impact than some. I don't know. I haven't looked into it. They're actually looking really, really good right now. They're going to break out above this May high if they stay at 145 as they open. The RSI is positive, a little overbought at the moment. It's 71.94, and the PPO looks really good. We had a midline crossover, meaning that it went from a bullish sentiment to more of a positive bullish sentiment, and that's continued to rise, although it might be decreasing just a little bit, but it still looks really good. The accumulation isn't quite back to the peak that we saw in November 18th of last year, but it's not far from that peak. The money flow is positive, 0.064, so that's in bullish territory. They have outperformed the S&P 500 by about 5%, 6% over the past year. They are underperforming the discretionary sector by -3%, but they are outperforming their industry group, which is apparel retailers, and that group is underperforming the S&P 500. So TJ Maxx actually looks pretty good, like a pretty good chart. It's above its 20-day, 50-day, and 200-day, which are all increasing at the moment. They had pretty high volume, above average volume, leading into the earnings. So they're looking good at the moment to me.
Yeah, and this is a real consistent one. I mean, it just seems like year over year, this is a consistent stock. So
Is this an
that's a
all-time?
compliment.
Is this an all-time high? Yeah, it looks like it pretty much would be.
I mean, look at that
more or
chart,
less.
right?
Yeah.
That kind of tells you the story of the stock. It's been consistent. It's been moving up. It's one of those safety stocks. So,
Yeah, if I
and
go to a weekly view, I can go back even further. Yep, look at that.
and Lemax too. Why is TJX always going up? Okay, so my answer to that is because they're consistent, because their proposition is clearly understood by the investor. The investor knows these guys are not trying to be a big, fancy retailer with the most expensive, real estate leased out. Forth. They're somewhat as a kind of somewhat like Costco, low frills, good value, and the loyalty from their customers is what keeps the revenue very steady, and they continue to put product on the floor that customers want. So it's just a very well operated business. It's like when I go to, in Southern California, In-N-Out Burger, right? It's amazing that In-N-Out Burger, I can get in there and I can eat a delicious meal, maybe not the healthiest meal you could eat, hamburger and fries, but boy, it's the best hamburger in Southern California. And amazingly, a hamburger and fries, and I get a cup of water. I'm in for $6, $7. How's that possible with all this inflation? It's a very well operated business. I go somewhere else for a cheeseburger and fries, they want $20. Well, the loyalty to In-N-Out Burger extends, beyond the price, but I think the price has a lot to do with it. I know when I'm going to go to In-N-Out Burger, I'm going to get a good meal. It's going to be tasty. When Shadow Guy was in Southern California, I took him to In-N-Out Burger, and we had a nice cheeseburger together. And it's $7. It's a great value. Back to TJ Maxx. If you have that type of brand where the consumer just has that expectation of value, like Costco, it's a moat in itself. You can put inventory on your floor and it's going to move because your customer is kind of trained to know that, hey, if you're buying it at TJ Maxx, you're getting a good deal. So that's why the stock keeps moving up, because the business is really solid. So
yeah, one of the things I see in Fast Graphs, I saw a comment that it's overvalued, and is the valuation sustainable? Their fair value is this gold line in Fast Graphs, and the blue line is the multiple that the market typically applies to this company. And they're currently trading above both their normal and their fair value. But they have traded above fair value since 2011. So I don't see a single time since 2011 where they have traded below their fair value.
Yeah, and
So
Sam
they do have a premium. There's no doubt about that. They're trading about 5 times their normal premium.
Sam has a good point. He's like, hey, he's going to compare TJ Maxx to Costco, and I think you're going to get very similar stocks, like from a trend perspective. And I'm going to flip back to my screen real quick so I could show this graph. So here's the 5-year.
The charts in Fast Graph look identical almost.
Right. And so when you compare Costco to TJ Maxx or TJX, I keep calling him TJ Maxx because I go to a TJ Maxx, as you get very similar charts where these stocks are moving up. And, if I price Costco, I'm going to get a stock that's priced at a premium because it drives a premium. Its stockholder believes in the proposition that Costco has. TJX is a similar type of stock. So it has that loyalty from the shareholder. It's earned over year after year after year, a consistency. And, good job, TJX. You're in good partnership with your stockholders. All right. So I wanted to kind of abandon the script a little bit just for the moment. And we got a lot of chat going. Thanks, everybody. Keep it coming. I'm going to catch up to the chat in a few minutes, but I wanted to go over Novartis. This is something Shadow Guy brought up, and he brings up a really good stock here. Novartis is in healthcare, pharmaceutical medicines in Switzerland. And this performance looks great, 28%. Healthcare has been kind of under attack for last year, and this is really looking good for the year to date. The 1 year, not so much. It's sold off, but the market just provided a really nice opportunity at the very beginning of the year, and that's how the performance was achieved at 28%. While you get paid a nice dividend, looks good. It's a big cap, $242 billion. Revenue is $55 billion. P ratio is rational at 18. Forward P looks really good at 13.64. These are good numbers. Analysts say it's fairly priced. When we look at their growth rate, they're growing trailing 12 months by 13%. That looks really good. That's a big number they're growing on. So that looks good. Let's take a look at Gross margins are 76%, right? We just looked at TJX at 30. This is why pharmaceutical companies have, in my book, a little more desirability is, man, they make a lot more money. And look at this cash flow. Whoo-hoo. From 13 billion in 2018 up to 19 billion in trailing 12 months. This is looking great. Really good looking stock. Just to show the chart, I like data that trends upward. It sets the expectation that this is over time just getting more valuable. It's producing more cash. It's using this gross margin rate and producing more cash and loading up that balance sheet. This stock here, I'm not sure I have a valuation on it, but this thing looks good to me. So at their current cash flow rate with their growth, this is discounted. Let me see if I have a valuation on this. Nope, I don't.
They are undervalued in fast graphs.
I think they're going to be priced at a discount because this is just really good free cash flow. They're growing at a good clip. The only thing that can spoil the recipe here is really a lot of debt. I would venture to guess this is worth about 400 billion minus debt. And let's see what their net debt looks like. So, yeah, not too much debt. So yeah, this is nicely discounted and it's been performing well. And what's, a breath of fresh air is healthcare is, at least for a week or two, hasn't been under attack. It's actually been in rally mode. So real good to see Novartis. Really good idea there, Shadow Guy. Really good performer. Can you show us the charts on Novartis?
You bet. Looks like they're trading at least a 52-week high. I don't know if it's an all-time high or not. They did break out above this level yesterday. Looks like the 20-day will be crossing the 50-day here shortly if this price pattern continues. Both of those are increasing. The 200-day is increasing as well. They did hit a low of 97 back in April. They've recovered quite nicely from that. The RSI is sitting at 66, so that looks good. The PPO is in positive or bullish territory, so that looks good. The accumulation looks like it's at a 1-year high. Money flow is bullish. They are underperforming the S&P 500 by just a couple percent. They're outperforming healthcare sector by 23%. They're outperforming their industry group, which is pharmaceuticals, by 28.08%, but the pharmaceuticals industry is underperforming the S&P 500. So this looks like a pretty strong stock, but not necessarily in an industry that's performing well at the moment.
Very good. Yeah, good one. Very good one. So I don't know if you got it loaded up, but can we pivot over to Lowe's?
Yeah, and just to show you fast graphs for Novartis, they are undervalued as far as fair value and their normal multiple at the moment. What was the next one?
Lowe's. And Lowe's, as you cue that up, is obviously the big competitor to Home Depot. I think Home Depot's outperformed Lowe's historically, in my opinion. It has a higher market cap. But Lowe's, I think, has, sometimes I go to Lowe's because they have a better selection and the way they lay out their stores is a little more retail oriented, I'm going to say, where Home Depot is like a builder store. It's not as nicely arranged as a Lowe's.
Lowe's has a really good return policy, and they also give a 10% discount to veterans.
Good to know.
Yeah, that is nice. Okay, so they'd been trading under their 200-day moving average for quite some time, since almost the end of February. They are the 20 days getting ready to cross above the 200-day. It looks like the 200-day is declining and maybe beginning to flatten out. The 50-day is on the rise. They had a lot of volume. Market's not open today, so this is yesterday. They had a lot of volume yesterday going into the earnings, so that foretold some good news for the earnings. The RSI is slightly overbought at the moment. PPO looks great, has been bullish since middle of July. Its relative strength and momentum is better than that of the S&P 500. Accumulation is near a one-year high. Money flow is positive. They have underperformed the S&P 500 by 6%. Underperformed discretionary by 14%. And they're underperforming their industry group, and their industry group is underperforming the S&P 500. So other than those stats there, the rest of it looks pretty good actually at the moment. And
Yeah.
then I think it was if we look at lows in the pre-market, yeah, it's going to be up open around 262 or so, a little bit above that.
Mm-hmm. Mm-hmm. Yeah. Let me share a few things. So first, I wanted to show a chart of Lowe's compared to Home Depot over the 5-year. It looks like Lowe's is outperforming Home Depot from an appreciation perspective. It's up 58% versus Home Depot's up 43%. So now these are stocks that are in a way getting it done. I mean, at 58% plus that dividend, you're doing 11-12% rate of return. That's not bad. My goal is 100%, right? And this stock isn't bad. It's just, I, you know, as an investor, we should always invest in things we understand, things that we believe in, things that we feel we have maybe a knowledge advantage. And I get retail and I understand what they're all about. It's just not my cup of tea most of the time. I'm like, man, I just think all the challenges that these businesses, are confronted with, like, they have to pay a lot for their real estate or lease, cost, employee cost, theft. I mean, the list is long. And instead, I'm an Amazon stockholder. But aside from that, let's take a look at their fundamentals. So Lowe's is a $143 billion business. Its revenues are $83 billion. P ratio is 21 on the current year. Forward is about 20. And analysts think there's a little discount available. When we look at their financials, the quarterly, they beat, but I mean, look at this beat, 1.58% growth. That's not keeping up with inflation. So if you just had inflationary price adjustments, you didn't raise your price enough. and you got to think there's some kind of tariff impact. They may be putting off, like, hey, let's not raise prices because that could turn away customers. I don't know what they're thinking, but there's got to be something in the supply chain that's coming with regards to tariffs at some point. The other quarters haven't been as good, right? These are all negative quarters. Man, that's not good. Previous years, 2024 was not good. 2025 fiscal year, this is the retail calendar. The reason they close their books a month after Christmas is they want all the returns to be returned during the same fiscal year. They don't want to end their year on December 31st. And then the following year, they have a bunch of returns, which is an offset to revenue. They'd rather keep it all within 1 year. That's why they close a year after the calendar year. And for them, fiscal year 2024 was not good. Fiscal year 2025 was not good. This year, it's getting better. And I guess investors like that. Now, Lowe's is the type of company that people can really understand quite easily. The retail investor, everybody understands what they do. They understand what Home Depot, what they do. And I would say that there's a influence of, for example, when we bought this house that we live in, we bought it 26 years ago. And the local Home Depot mostly, and to some extent, the local Lowe's, I think I've spent well over $100,000 at that Home Depot over the last 26 years. I mean, that's a couple of dollars. So when you spend that kind of money at Lowe's or Home Depot, you're like, man, I got to buy their stock, because if everybody spends like I'm spending, boy, these guys are going to make a fortune. So there is a little bit of that influence. Whereas like an NVIDIA, I don't buy any GPUs from NVIDIA. So it's all completely alien in a way to me. Free cash flow. They have improved their free cash flow. It looks terrific. Looks really good. And their gross margins a little better than TJX at 33.46. And I think they have products that are priced higher. Like you go to TJX and you might buy a shirt for $10, $20, where you go to Lowe's and you might walk out with a $150, basket of stuff. And so that's probably the difference there. Fundamentals look good. For the investor that's looking for safety, something easy to understand, Lowe's is a pretty good option. They pay a dividend almost 2%. Analysts think there's 26 analysts covering Lowe's. They think it's discounted by a little bit. They're not all over the place. They're kind of in this kind of a pack of analysts, from targets going from $240 a share up to $305. Looks like the market's open and the stock has opened up 2.71%. When we look at their forecast, they're supposed to continue to grow a little bit. All right, that's good. But again, I don't get excited about 3%. It's like, okay, that's good. It's a healthy business. But I guess my mind is in technology stocks, communication services, healthcare. Those stocks are just booming. So this one here, it just doesn't excite me. And I've never been a Lowe's investor. I've never been a Home Depot investor. I've just retail is not my favorite industry. I have other favorites. So Lowe's is out there. It's doing well today. Congratulations to Lowe's stockholders. You're up a little bit. What's the market doing? What is the market up to? So the market's opening. The Dow is opened to the positive, up a little bit. The S&P is down, and then the NASDAQ is down. Let me look at the heat map. It's super early. It's just 3 minutes after the market's open. So this isn't going to be something that's going to be long lasting, I don't think. But look at that. It's kind of following yesterday's sell-off. The big caps, the big names, investors are peeling off shares and selling them. And, the big names, Meta, Amazon, Palantir, Broadcom, NVIDIA. And it looks like some green is showing up in healthcare, back to utilities, real estate. Some consumer staples are doing well. So it's kind of yesterday is continuing for the first 4 minutes of the trading day. I like to look at this an hour after the market's open. So maybe toward the end of the stream, we'll come back to this and take a peek. It looks like Saeed is on. Good to see you, sir. Thanks for joining. Hopefully you're doing well. I think you're in Europe. Great to have you. All right, the next stock we're going to take a peek at, if you wouldn't mind, can we take a look at United Healthcare? United Healthcare has been a super interesting stock. And last week it was reported that, multiple super investors started positions in United Healthcare. A total of 19 now own United Healthcare. That's a pretty good number of super investors invested. The stock reached a low of 237 on August 1st, and now it's up at $300 a share. So it's stabilized and has shown a little bit of life. And I think the big picture for me looks really good for United Healthcare. These super investors like Warren Buffett, Michael Burry, David Tepper, who's having a terrific year, and he's really good investor. He's so good. He's made so much money. He owns the Carolina Panthers football team. And football teams are not cheap. You don't buy them at TJ Maxx. You don't buy them at Home Depot. You have to be a select wealthy person to be offered the opportunity by a football team. He owns the Carolina Panthers. That guy knows how to make money, and he has a team of analysts that look at stocks. He bought into United Healthcare. So all those things, to me, the big picture for United Healthcare is, I'm operating in a stock that I think is going to be priced at $600 a share in the next 2 years, because the valuation is terrific. And I'm seeing that institutional investors are seeing the same thing. And my reasoning comes from the fundamentals. It also comes from the big picture of United Healthcare, it being a very important business. It's not a business that's a nice to have. Health insurance is a must have. Most people want health insurance. They want it either through their employer or individually. They want health insurance. So United Healthcare to me is one of those stocks that I've been talking about for, probably the last year. And more recently was a stock that, has become super interesting and on its way up. Now, rather than going into fundamentals, because I could show you the fundamentals, and I think you guys would probably be like, yeah, you've shown them to us 10 times already. I would love to turn it over to Daryl and have him tell us what's going on. What are investors doing with United Healthcare? Where do you think this stock's going to go?
So last week on the 13th and the 14th, we looked at the 1 year chart. So in your Discord yesterday, I posted just a snapshot of this screen because it was forming a 3-day candle pattern that is known as an evening star, which is a bearish reversal pattern. So after this big jump, which was the day after the 13F filings were posted and made available, the price of UNH went up 11.98%. Went up again the next day. For this pattern to have completed, it would have needed to close about $2 lower yesterday. So it isn't officially an evening star, but it sure looks like an evening star to me, which is bearish reversal, which in the short term probably means we can expect some lower prices. And where I would put that price could be down around 288 around this 50-day moving average. So that's what I'm looking at. Anything in between here and 288, I'd be really interested in adding some more shares. Another interesting thing that I also posted in your Discord, no, it may not have been in your Discord. It may have been another one because someone else mentioned something. Is these two bars right here. Those are volume by price bars. Mm-hmm. And that gives me some levels where people bought or sold over this price range. And considering we're only looking at 3 months, but that's after the big drop.
Mm-hmm.
So it's still pretty relevant. I had a feeling when I saw this jump that it wasn't going to last because there were a lot of buyers right here. So they were buying over here. And then the price went down to
Right.
237 or so. So these are called stranded longs.
Mm-hmm.
When that price got back up to there, if they were looking at uh, a
Right.
loss from 301 to 238, they'd be, some of them are going to be looking to get out.
Yeah.
So I had a feeling there was going to be some selling pressure here. And sure enough, that has played out.
Yeah, that makes sense. I mean, if you bought the stock and within a month you were down like 25%, you're like, oh my God, what did
Yeah.
I do? And then
Yeah.
when it gets back and you're like, hey, I can walk away without losing any money, maybe you take the money out of the stock. Now, that's a short each investor is going to make decisions for themselves, but that's kind of a short-sighted kind of strategy.
Yeah.
I think my approach is, look at fundamentals, understand what the true intrinsic value is of this stock, and then form a long-term thesis, a long-term plan on the stock. So the way that I'm interpreting what you just shared is, okay, once we get these short-term sellers out of the way, I think the big picture, or I should say the general picture on the stock is good. Um, I was watching a different, well viewed channel, The Compound. There's now I like watching different channels, not necessarily because I like trading the way they do or investing the way they do. I think The Compound, they're more traders than they are investors, although they do hold some positions long. And their sentiment on United Healthcare, I mean, that's exactly the kind of stock they stay away from and just say bad things about. And in one of this week's episodes, they had really good things to say about United Healthcare. And I'm like, holy smokes. If they're saying good things about United Healthcare, those are kind of perma bears on a United Healthcare like stock. And I think the sentiment in the investing community is changing. We just need the company to continue to heal from a lot of the wounds it's had. Hire a good CEO, permanent CEO. Get a solid earnings out there. I think they're going to report in about 2 months. Continue to show growth. They've been growing their business. So that's good. But I think again, my plan is to continue to load up on United Healthcare because I think this stock's going to be worth $600 a share in the next 2 years. All right. So thanks for that. That was one of the big check boxes that I wanted to cover. So let's keep going down the list of companies that announced. If you wouldn't mind, can we look at ADI, Analog Devices? This is a semiconductor company. They do more integrated circuits and they operate in China, among other places. Tell us about ADI.
Okay. So they have not got back to their all time, or not all time high, 1 year highs. I didn't look back further to see if it's all time or not. But 247, they are making their way back up there. The 20-day had been decreasing. It looks like today it's turned around and starting to move back forward. The 200-day is looking pretty flat at the moment. And the 50-day is being covered up by my 5-day. But they are up today. It looks like about 2.71%, 236. They do have a positive RSI. So they're sitting at 58 at the moment. The PPO just entered into bullish territory today after being underwater since about July 28th or so. Their momentum is better than that of the S&P 500, but their relative strength is less. They are sitting near all-time highs for accumulation. Their money flow is not quite bullish. 0.05 or better would be considered bullish, but they are just barely below that level. They are slightly underperforming the S&P 500 by 5.7%, underperforming the technology sector by 7.5. They are underperforming their semiconductor industry group by 16%, and that industry group is outperforming the S&P 500 by 13%. Overall, they've been pretty much flat with the, since last year. They're pretty much trading at the same price as they were last year.
Interesting. So ADI is doing well over the 5-year, up 100%. They pay a dividend as well, so that looks good. The year to date, it's up. It's right there with the S&P, so it's doing fairly good. I think the stock is priced at a little premium. It's $117 billion in market cap. Revenue is $10 billion, and this is a part of the data center, and there's a lot of energy there. But you're paying a high PE ratio. When we look at their growth rate, it's quarterly looks really good, 24, but this is a cyclical industry. You could see these negative numbers. It's they're going to build out the data center, and at some point they're going to say, okay, we don't need any more product. And you have years like 2019, 2020, where you have a decrease in revenue that could come up in a year or so. Once they start forecasting that, the stock will sell off. The gross margins are around 60%, which is good. Not great, but good. And their free cash flow looks good. But I think I could probably get to about 80% of this stock price from a valuation perspective. So this one's not the investment for me. I think I've got better choices in semiconductor as well as other industries. Semiconductor is expensive. The story, the AI story, good story. It's that the data center build out, buy something that's going to ride that data center build out. And I get it. That story's worked. But at some point, that story's going to get a little old, and then you're left with fundamentals, in my opinion. And I think this one here is going to settle down, probably sell off at some point, because once growth stops, this thing will kind of come down. So that's Analog Devices. It's having a good day. Congratulations to those that own the stock. Looks like a good one. So Mike, the dividend investor guy, is with us, and he asked, can we take a look at Monday.com? And he is a paid member. He's been a long-term paid member. Really appreciate it, Mike. Let's take a look at Monday.com and kind of go through and see what's going on with this stock. They announced on the 11th, which was last week, and they develop software applications in the United States, UK, and internationally. Okay. And where are they located again? So they are in Israel. Okay, perfect. And let me get my head around their actual applications. I like looking at websites just to make sure I understand what they do. So they do dashboard and reporting, work management, development, CRM, service. Okay. Got it. So that's where they play. All right. So that's small cap, just a little under $9 billion in market cap. Revenue is 1.1 billion. P ratio is high. We'll see what their growth rate looks like. Analysts think it's really discounted, 79.18. and growing nicely. Real nice growth. 26%. Looks good. Looks like they just keep adding customers. This growth line, really important just to point out, is when you have high revenue growth, it means customers really like, in this case here, it's a service. They do software as a service. And they like it so much that they stick around. They're willing to receive price increases, and better yet, new customers are coming and becoming customers. Existing customers are buying more products and solutions. So that really represents a good business that is growing. Their product is really well received by the market. Software companies tend to have really good profits, and these guys have 89% gross margins. They're a young business, so that gross margin is really, really impressive, and they'll continue to be able to do a lot of good things with that gross margin. Generate cash, generate profits, build the business, because when you're generating $325 million of free cash flow, you can keep expanding your portfolio of products. You can keep investing in research and development. You can keep making your business stronger and better, listening to customers who tell you, hey, we really need software for other parts that are relevant to your space. So all those things are real positive. Look at this free cash flow growth. Looks really, really great. So that looks great. Free cash flow looks great. Gross margins look fantastic. What are analysts saying? How many cover it? 24 analysts cover this stock. They're saying, man, this is highly discounted. Now, those fundamentals do point to a very valuable stock. So that looks good. The growth is going to continue. Really nice growth numbers, and a good number of analysts are putting their consensus forecast out there. Earnings per share are going to expand really nicely. Everything looks good on this one. So I think I have valuation on this one. And yeah, I agree. It's discounted. I'm probably a little more conservative than what we just saw, but a discount's a discount. This is a really, really nice business. Now, I've been in the software industry for a while being 25 years. And these categories, are not exactly, I would say, underserved. These are categories that other software companies do. So one thing that I would just put out there is these guys have plenty of competition. Okay. You have competition from Salesforce, Salesforce can do all these things, as well as ServiceNow. These guys may just have certain industries where they just really, really do well. And their growth is looking great. So they service marketing, sales, product development, research and development, HR, IT. These guys might be we've heard of this company Figma, right? That IPO'd. Figma does a lot of these things. Okay. Figma helps in the collaboration process and the product lifecycle process. Figma helps teams kind of work better together, either develop a product better, implements a new website together. So work together. And these guys are doing the same thing. So I think I made a point on Figma recently where it's like, hey, Figma is doing something that they have competition in. It's not like Figma came out and, oh man, nobody does that. Oh, it's such a special company. They might be a really good business, but here's an example of Monday. They do about the same thing. So these guys here, I'm a little lost on why the stock hasn't rallied more. Let's take a look at the year to date, down 26. Why are they down so much? Mike, do you know a story out there that why is the Monday business sold off so bad? Is it and I'm gonna turn it over to you, Daryl, and then I'm gonna keep doing a little homework to see if I can find a story out there that explains why the market does not like Monday.com, but the fundamentals look fantastic.
Yeah, we looked at this a little bit on the 14th or the 13th rather, so a week ago. Nothing's really changed since Then we do have a declining 50-day, a declining 20-day, and not much has happened since they reported earnings. It stayed right around that level there, so it doesn't appear to be getting any worse. The volume appears to be declining, getting back to close to the 50-day moving average. It is extremely oversold, 19.87. You don't see the RSI on many companies get that low. The PPO is very bearish. Slight improvement, becoming less bearish.
RSI is at 20. Oh my
Yeah,
gosh.
it's very low.
Pretty soon they're going to be giving away shares.
Exactly. The accumulation is at a 1-year low, and that's confirmed by the money flow here. They did have positive money flow for many months, but these sell-offs have been worse than the cumulative value of the positive money flow. So that's why the accumulation distribution line is so low. It's at a 1-year low. Underperforming the S&P 500 by 43%, the technology sector by 44%, the industry group software by 46%, and the software group, which has also been under some pressure, but it's still outperforming the S&P 500 by 5.71%. So the chart's looking a little rough at the moment.
Man. Well, I think it's an opportunity, but man, it's these small caps, they're not going to get like the visibility that the big caps get, and it's an art to know when to buy. I'm going to watch it closely. I would be a buyer of Monday. It's just, when's it going to find that bottom? When are we going to start to rally? Now, here's something. I could have showed you yesterday's heat map, but I'm showing you today's. And boy, I could have just showed you either one. You wouldn't know which one you're looking at, because it's almost like a carbon copy of what we saw yesterday. Meta sold off by 2%. Google sold off by a little over 1%. Amazon sold off by 2%. Nvidia sold off by 3.5% yesterday. So we're seeing a big cap sell off. We can't run to big caps for shelter, at least for the last 2 days. Palantir sold off, I think now, maybe 15% over the last 5 days. And investors are seeking safety in good old consumer staples, real estate, utilities, energy, and a little bit of healthcare. Eli Lilly is under pressure, but everything else healthcare, except for Eli Lilly and United Healthcare, are looking like they're moving to the green. So interesting day. Insurance is doing fairly well. There's Progressive up, Chubb's up, and I'm sure Allstate is up as well. So we're under some stress. Now, to me, 2 days like this begins to mean something to me. It means something's brewing. Maybe it's selling off because everybody's bracing for what the chairman of the Federal Reserve is going to say on Friday. And it's well covered that the chairman is under pressure from the president. Hey, president would like to see interest rates move down. If anything, just psychologically, everybody could feel like, hey, great, we got lower interest rates. Let's go buy a house. Let's go do some more projects. Let's start a business, that kind of thing. And I think if he doesn't move interest rates on Friday, I think the market's probably going to sell off, because the market's not going to have a direction. And especially if the Federal Reserve were to have some comments in there that are concerning, it could move the market lower. I don't know what to guess at of what chairman speech we're going to get. I doubt that he's going to come out and say, man, the economy is great. Things are so awesome. And we're lowering interest rates. I just don't expect that. I think he's going to have some cautionary comments, and we'll see if he moves interest rates. I'm not sure what he's going to do. What do you expect out of that meeting on Friday?
That's a really good question. I don't know really what to expect. I know the market is expecting some rate cuts. If I look at the CME FedWatch tool, there's a pretty high percentage that will get a cut. There was talk even about a 50 basis point cut, but I think that's kind of off the table. We could still get a 25 basis point cut in September, but I just don't know. I just don't know how he's going to word this speech. It's going to be very interesting on Friday and will be market moving.
Perfect. So let's kind of keep digging there. And this is kind of around the same topic, but a different conversation piece. So one thing that I look at interest rates. Interest rates are a metric in our economy that it's important, right? If you have a 2% interest rate, if you have really low interest rates, real estate's just going to be more favorable. Big assets are going to be favorable. High interest rates are the opposite. But it seems like there's excessive emphasis on interest rates, especially when they're moving a quarter point. And I'm just like, I scratch my head and go, that doesn't make a difference to me. I still think like United Healthcare is a buy. I still think, like some of the stocks I'm buying, it's not changing. I'm not even batting an eye. It doesn't matter to me. Why there's so much attention on interest rates when they're moving a quarter point, half a point, to me is a little bit of a, I don't get it kind of situation. But maybe I'm kind of in the minority there. How do you feel about interest rates? How do you use them in your investing?
I want them to come down for my investment thesis because I'm heavy in real estate, and that'll definitely benefit the real estate. But within the real estate industry, I'm in about 5 REITs, heavily invested in those, but they have pretty good credit ratings. Most of them are I can't remember, BBB plus or above. So
Mm-hmm.
most of them are investment grade. So they tend to get better rates than other REITs that are a little bit more challenged. So I feel good about the REITs that I have, but they'll still benefit if they can get some rate cuts. And I have some charts. I'm not going to show them, but I have some charts showing that correlation
Mm-hmm.
to the 10-year, and the correlation is pretty much clear as day.
Yeah. And I think part of, I guess part of my thinking is there's so much noise, you know, there's constant noise, and there's, you know, as an investor, I need to know what noise to eliminate out of like my thinking and really what I pay attention to, and what information I really should have a stream of influence on, right? And I think in general, it seems like when the market doesn't have much to talk about, they talk about interest rates and they talk about economy and so forth. It's almost like, I heard that last week. I don't need to hear it again or hear it 100 times. We don't have to talk about a 0.25% interest rate cut over and over and over again because it doesn't make a big difference for me. I'm trying to find, I'm not trying to move my stocks 0.25% at a time. I'm trying to find that stock that's going to double for me in 2 to 3 years. And anyway, so enough of that. Let's move on. We have a sell-off going on. We have stocks moving down. Whew, man. And these big caps obviously are going to move the index, but again, it's showing that, hey, maybe these smaller caps, capital is moving towards them. And I think that's good. I think that's kind of in a way healthy, that we're getting capital over to some of these businesses that have terrific fundamentals. Let's keep moving on stocks. I think we covered the member request. There is a stock out there that I wanted to selfishly talk about because I am an investor, and that's FUTU Holdings. It is it up or down? It is down a little bit, minus 0.37%. This is a company that's headquartered in Hong Kong, and it does, in essence, what Robinhood, what Interactive Broker, what those companies do, but they do it in Asia. They serve China, they serve Japan, Korea, Vietnam, that region. And these guys are having a terrific time over there. You think about the big picture over in China, those folks save a lot of money. The Chinese, it's interesting how you see multi-generational trends. Here in the United States, of course, we had the Great Recession about 90 years ago, roughly. And that really established or strongly influenced that generation to be super savers. And folks in that era, they really knew how to stretch a dollar and how to make things, function with a very low budget. And it created, then we went into World War II, and it created a great generation of folks, just really hardy. And we owe them a lot because they put together a country that's we now benefit from. Well, you look at China. If you look at their last 100 years, they went from an agrarian economy where a lot of people didn't have enough to eat, and they had famines, call it 40, 50 years ago, maybe 50, 60 years ago. And it created, I think, a desire or a life habit of saving, like always save, save, save. So the high saving rates in China, I believe, are the big opportunity, a huge addressable market for FUTU to take and offer stock investing and other forms of investing to this population that has a lot of capital in their savings. And now with information flowing so freely, I'm sure a lot of people in China and surrounding countries are looking at examples of other investors that have done really well with Chinese stocks like Alibaba, or American stocks like NVIDIA or Apple. I mean, these are really great examples of how people have accelerated their wealth. And that's why FUTU is increasing their accounts by 40%. That's why their trading volumes are up 121%. These are awesome numbers. So FUTU had a terrific earnings report today, and they announced before the market opened. This is why I own this stock. It's the big picture supports this stock. The operation of the business looks great. The growth of the business looks phenomenal. I mean, these are big numbers, and this is not a tiny business. This is a pretty good sized business, even though it has good growth amounts. This is in the Hong Kong currency. And what is the HKD to US? 13, so 0.13. So this number is roughly about 2 billion in US revenue, and they're growing at 70% trailing 12 months. That's a really good growth rate, and you see the acceleration of growth. So this one here is one of my favorite little stocks, and it's not little anymore because it's been going up so darn fast. $23 billion in market cap. Over the 1 year, it's up 169%. That's getting it done. That's why I don't want to focus on a quarter of a percent rate cut. No, I want to focus on where can I go find the next FUTU Holdings. I want another FUTU Holdings, please. And this one's been doing great. It looks like it's even today, even though it announced terrific earnings. And this one here is one of those stocks that I owned. FUTU, Robinhood have been just phenomenal for my portfolio. The only regret is, man, I wish I would have bought 10 times as much FUTU shares that I own today. But hey, it's natural to be greedy when you got a good thing. So what do you think of FUTU?
Well, the chart's looking pretty good. So they
Is
broke.
pretty good a technical term, or is that a Daryl term?
Yeah, that's a Daryl term.
All right.
So they broke out above a double top on July the 9th or 10th, somewhere in there. So that looks pretty good. Sometimes that serves as resistance, but they broke out above that. And since that point, up 30%. Looks like today they did trade down to the 20-day, but it's recovered back about $6 to 167. So it bounced off that 20-day moving average. They do have a positive RSI. They've had positive PPO since May the 12th, it looks like, maybe even a little earlier, maybe early May. So that looks very strong. They're not quite back to peak accumulation, at least over the past year. They're down just a little bit. The money flow is actually went bearish this morning. They are outperforming the S&P 500 by 152%, technology sector by 149%, software industry group by 139%, and the software industry group is outperforming the S&P 500 by 5.6%. They're looking really strong, showing a little bit of weakness here the last 4 days or so, and that's showing up in the money flows, but still looks very strong.
Excellent. Very good. And what was the RSI again?
The RSI is 61.44 at the moment.
Very good. Very good. Okay. Another stock, and maybe you can keep the screen. Can you take a look at Meta? Meta's been selling off. It's a big cap, and I'm not overly concerned, but it's last 2 to 3 days have not been fun for this Meta stockholder. What are you seeing on Meta?
Well, it is, looks like it's coming back down to these highs that they had in February and June. So it had broken out above that in for the last 2.5 weeks, but looks like they're coming back down there. Not uncommon to fill a gap that's been created on earnings. So it is filling this gap. Wouldn't surprise me to completely fill in that gap.
Mm-hmm.
Let me add volume by price bars just to see if I can see if there's a support shelf anywhere. Oh, I'll dim those down just a tad. Yeah, so let's look at some of these price bars. Looks like pretty solid buying from 643 up to 742. There was more buying from 633 down to 564. So starting about 639 would be a really good support shelf, but that's around the 200-day moving average. So if this sell-off really gets going, let's see what percentage that would be. That'd be about a 12% sell-off. I was actually looking for about a 5% sell-off in the S&P 500.
Mm-hmm.
And Meta is probably has a higher beta than the S&P 500. So I don't know what the beta is. Do you know what it is right off the top of your head?
I don't.
Let me look and see what the beta is. So 1.27. So it's a little more volatile than the S&P. So I would not be surprised if this sell-off gets in earnest to come back down to around 640 or so.
Mm-hmm. Well, the market is selling off very similar to yesterday. And I would say that I think 2 days in a row like this are going to get the bad news machine cranked up. What is the bad news machine? I think now the storylines are going to be like, whoa, we're prices are way too high on stocks, and a lot of this is just going to be repeated over and over again. And I think the anxiety moving towards the Federal Reserve chairman talking on Friday is just going to continue to go up. So I don't know that we're going to recover a whole lot today and tomorrow. And we're probably just going to have to wait until the Fed chairman talks, and then we'll know what we're dealing with. But as mentioned, I mean, for the last month or so, August, September, October, September being the worst month historically, we tend to have reasons to sell off seasonally. Now we have an extra reason to sell off, which is we have high stock prices. We've just have had terrific stock prices or appreciation on stocks for the last, couple of years. And especially for the last 4 months, we've seen just terrific stock appreciation. So for it to sell off is not out of the question. And it might be a little bit of good medicine. Hey, let's get some of these stock prices down a bit. Let's get the valuations to be a little more rational, especially around some stocks. And I think small caps are probably going to see some pretty good sell-offs in some industries. And hopefully some industries like healthcare continue to see some capital flow in, because these valuations, I think, are really good, and they are bringing in more investment. Energy's going up. That's good. Utilities up, real estate up, staples are up. So that's pretty good. And of course, Berkshire is a safety stock, and investors are moving over to Berkshire. Hey, Warren Buffett and his team are probably going to be able to navigate this, and we'll see how that goes. So interesting day on Wall Street.
By the way, we will get the FOMC meeting minutes from the last meeting today. That might give us a little bit of insight on what additional information they were discussing at the last meeting.
Mm-hmm. Mm-hmm.
And
Yeah.
may help form some opinions for this Friday.
Okay. All right. Looking at the big cap stocks. So NVIDIA's down 3.25. It's still having a very good year to date. Microsoft's down a tiny bit, still having a terrific year to date. Apple's down. And I heard Samsung is eating into Apple's market share. That the Samsung foldable device, which I considered, by the way, I ended up buying a Samsung, but I got just a kind of regular phone, so to speak. But they have this terrific, impressive foldable, gives you this tablet-like, interface, but then you can fold it and stick it in your pocket. Really impressive.
Yeah,
well, that phone's eating into the market share, and it's eating at the premium, because that phone is not cheap, by the way. It was like $1,400 when I shopped it. And I'm like, I'm going to pump the brakes on that, because I don't use my phone a whole lot anymore. I use my computer or my laptop most of the time. And we'll see how that plays out. But I've always said that Apple is one innovation cycle from being irrelevant. And if you want, kind of study history, and it tends to rhyme, BlackBerry was dominant 20 years ago, 25 years ago. BlackBerry's absolutely, everybody had a BlackBerry without exception. And then an innovation cycle happened, and everybody moved to a tablet like interface on phones, and BlackBerry was out. Done. Next. Their market cap back in the day, 25 years ago, their market cap was $360 billion. That was a huge market cap 25 years ago. Today, they're like 20 billion. There was so much loss in wealth and capital out of BlackBerry. Apple's one innovation cycle, and it could be AI. Who knows what we're going to get out of AI? It might be that, the interface may totally change. And if Apple's not ahead of it, they may see their market slip away. And the risk is Apple's a one product company. It's the iPhone. You have no iPhone, there's 80% of the value. They cannot sell enough MacBooks to even come close to their market cap. They cannot sell anything else to get anywhere near. It's not like a Google that does have a more diversified business, or Amazon or a Microsoft. They have diversified over time. Google down today. It's barely positive for the year to date, lagging the S&P. Amazon's in the same boat. Amazon, I like it and dislike it at the same time. I like the discipline that Jeff Bezos was quoted during the dot-com bubble, and he wrote a letter to his employees, and he used a phrase which I believe. He said, the stock price is not the company, and the company is not the stock price. And he was referencing the fact that Amazon at that time continued to add customers. The customers were spending, each customer was spending more on their baskets as they checked out. So the business was very healthy. It was growing organically. And the culture at Amazon has stayed that way. They're obsessed with the customer. They just want to continue to make the business stronger and more valuable long term. Short term, it almost doesn't matter where the stock trades. So I love the concept, but being an Amazon shareholder, I hate it when the stock sells off. It's like, oh, okay. Well, I knew what I was getting myself into. Meta is down 2.19, but it's having a terrific year. Hopefully the bleeding stops. Broadcom, I believe, out of the top 8 stocks, because I think Tesla's kind of a dumpster fire, but Broadcom, I think, is really overpriced. And I know Broadcom. I was a shareholder. I know their business. It's a fabulous semiconductor. And I think they're in the right place at the right time. But I would not be surprised if this stock is it's priced at 30 to 40% of its current stock price in the next 2 to 3 years. Once it's understood that they make semiconductors, they're good semiconductors. They're in high demand right now. Got it. But there's nothing special about those semiconductors. I think other competitors can come in and compete against Broadcom. And it's not quite as, their advantages are not quite like NVIDIA's, which is their GPUs are just so much better than everybody else. Broadcom just kind of going along for the ride, so to speak. So that stock there, I think, is going to crush in the future. Berkshire, look at that. They're catching up to the S&P. Good for them. They're up on a down day. It's the only up stock out of the top 10. Tesla, I don't know what to say about Tesla. To me, they're a dumpster fire. I was an investor in Tesla a long time ago. And it was more on principle. I was like, I think they have good ideas. Held the stock, and then I sold it. And I just wouldn't invest in it anymore because their fundamentals don't even come close to their market cap. I can barely get to like 25% of their market cap. TSM, having a down day for obvious reasons. And Walmart, look at that, up 1%. Nice safe stock, beating the S&P. So it's a nice red day. Good day to buy stocks. So on days like this that have this volatility, I know that you do some options trading. What are some recipes to make some income on days like this for you?
Yeah, I haven't been trading options too much in the last 6 months or so. So I don't necessarily have any advice to put in there. I haven't been looking at options pricing. I heard on a podcast this morning from yesterday that the cost of puts are getting pretty expensive, so that insurance, buying any insurance is pretty expensive right now. But other than that, I don't really have a whole lot of information on options.
Okay. All right. I kind of put you on the spot there. Sorry about that. But
That's all right.
looks like we have a comment. Jan, he's got a comment on eToro. By the way, I was looking at eToro. My issue in the UK is potential customers cannot use ISA in the Toro app. I'm not familiar with ISA, which saves a lot of money on taxes. Therefore, Toro will not be so popular in the UK. Thanks for that tip. I'm going to note that and look it up. I'm going to look that up. Thank you, sir. Appreciate it. And then, okay. Oh, you can't. So it's like an IRA. So if you can't have an IRA and therefore use, got it. So like in the States, right? If you divert some of your income into an IRA, you're basically not having to pay income tax on that portion that you took to your IRA, and then you can invest it, have the money grow, and you'll pay the taxes when you withdraw that money. I get that. Yeah, that is a disadvantage. So it'd be eToro is good for the pure trader that's using after tax money that is just trying to do trades and so forth. Thanks, Jan. That's really good value add. Appreciate it. All right, sir. So I think we've had a very good stream.
Let me show a couple charts, maybe kind of ease people's minds so they don't get too carried away with emotions on a downturn. Let's look at some what they call sustainability metrics.
Mm-hmm.
So this is the S&P 500 on the top. And then these charts down below are looking at, this first one is the QQQ compared to the SPY. Both have growth components in them. QQQ a little bit more growth than the SPY. When I divide one by the other, the Qs had been doing very well since the April sell-off. Now it is turning down now, so growth is becoming less favorable at the moment. These were showing when these were decreasing back in February, you could see that it was kind of foretelling a big downturn in pricing, but we're a long way from that at the moment. We're a long way from that. But you can see that this was decreasing going into the April 7th sell-off. And these big sell-offs were kind of warning signs. And it's that way on every single one of these charts. This is the XLY discretionary compared to staples. We're seeing a little bit of a downturn at the moment, but I mean, we're back to just where we were just a week or so ago. So I don't consider that the end of the world. Growth. This is big cap growth to big cap value, large cap. You can see a little bit of a decrease, only back to where we were in July. Mid cap growth compared to value, where that may be the worst. We're back to May or so. And then the small cap growth to value looks like we're back to where we were back in the third week of July or so. And one other quick chart that we can look at. And the reason I said a 5% pullback in an earlier discussion is that's where we were at the high in February the 19th. We were at 61.44. And if we pull back from this high back down to that level, you're looking at about 5%. So that to me, I think we'll find support there. Somewhere probably in these blue shaded area would be my second level of support, but I actually expect to hold support about where we were in February if we have a sell-off that large. And like you mentioned earlier, September is our weakest month of the year.
Yeah, and the seasonal period of sell-offs, we're 3 weeks into the first month, right? So we have 2 months and a week left, and so we've got kind of like the period of time when we could see sell-offs. If you asked me, like, can I just kind of end the year where I'm at, I'd probably take that deal.
Yeah.
So before, I haven't checked my portfolio, but I was up 26.5% on my top stocks before we started trading today. Now I'm probably still in the 20s, but probably took a haircut to that level. But that's fine. The sell-offs are part of the investing journey, and they're actually in many ways good opportunities disguised or wrapped in bad news. Like, oh no, this great company, its stock price has been lowered. Well, that's not bad news. That's a better acquisition price. I'll buy more shares. Were you going to share something here?
No, this is just a seasonality view showing September is a pretty rough month for the stock market in general.
Yeah. Yeah. And the earlier comment, or I should say, I just kind of reinforced that emotionally, let's just be realistic. It's not fun to see, stocks sell off, put a period at the end of that. But it shouldn't affect rational thinking. It shouldn't affect our analysis. It should still be the case where we're still looking for value. We're looking for really good, a stock that's going to double for us quickly, a stock that's going to be a long-term, gainer. That doesn't change. I think the noise changes. The stories go from, wow, how is AI going to change our lives so rapidly and stuff, to, okay, what are the fundamentals behind, this stock? What are the fundamentals behind FUTU, which is a stock I talked about earlier, or MNDY.com? Those fundamentals look great. Which brings me to one more point, which I saw a story early this morning, and it was that businesses, these are big businesses, big corporations, are not seeing return on investment in AI projects yet. Meaning they spent money, they created agentic AI agents to do work or supposedly do work. They created, chatbots that employees can access large language models to maybe access information a little quicker, a little faster. And they're not seeing return on investment. Now, I'm following the AI, paradigm. And again, I've been in software for a long time. And I was an early adopter of the internet way back when we had bulletin boards, and not the same experience we have today. And I believe that AI is definitely going to improve our interaction with data, interaction with applications. I think it's going to become more efficient. The timing, I think it's going to take longer than what the pundits are saying. Like, literally, some of the messages I hear is, oh yeah, we're going to see businesses report that they're going to lay off half of their employees because they don't need them anymore because AI is going to do it all. And I'm like, I don't think so. I think it's going to be slow, like 5 to 10 years, and then we're going to see real ROI. And the example I point to is like Robotaxi from Waymo, which is a Google company. That's taken 15 years. It's not a they did it in 15 months situation. No, they started testing cars 15 years ago in San Jose, California, and they kept improving, building, improving, innovating, creating, and now they have self-driving cars, which is pretty darn amazing. And they have it in several big cities, and they're growing carefully, but it took 15 years. That makes sense to me. It takes time to get these things right. Do you want your employees referencing an AI application that gives them 90% correct information? No, you need 100% correct information. If you're going to make a contract with a customer, you want 100% legitimate, perfect information. So you need humans to make sure they're getting the right information. You need humans involved to do a lot of these transactions and processes until we get it right, or at least we have a mechanism to weed out the errors that could really be harmful to a business, if not very expensive. So my AI expectation is, or I should say, my awareness of AI and kind of observing it is, boy, the markets are acting like AI is truly driving value in the business community. It is going to be a quick ramp up time, and I disagree with both. What are your observations? And feel free to disagree, please, if you feel otherwise.
I think it's going to come in pockets. So I've already seen where Amazon has crossed over 1.5 million robots in their factories. I think that's going to continue to grow, and it's going to grow at a much faster pace than self-driving, because you have such a big safety issue in driving compared to an isolated factory where you may exclude any human interaction where those robots are playing. So you don't, or working. So you don't have to have the same safety protocols in place that you do with driving.
Mm-hmm.
So I think we're going to see different pockets accelerate much quicker than others. Just yesterday, I heard that China had a robot Olympics competing. Yeah. They were competing in all different kinds of activities. And the robots definitely don't have the dexterity that a human has yet, but I think that they're going to progress pretty quickly. And then the large language models. I mean, I play around with Chat GPT and Grok, and those are, using data worldwide. Some of it probably mistaken, because you mentioned the 10% error rate. I know Fender is on, and he shared some in a Discord, and they provided some pretty silly answers to some questions.
Right.
But take a look at the legal industry. They're not using Chat GPT or Grok. They're using custom made large language models using the data from the legal profession.
Right. Mm-hmm.
Those are going to progress much more quickly, in my opinion, and displace a lot of paralegals than a large language model is to a general business. So all of this is going to grow at different rates, some of it much more quickly than others.
I agree with your observation. I think you're right that certain pockets are kind of like tailor-made situations for AI. Like you said, the legal profession, right? You have volumes of court cases. So if you needed to search, hey, I need to know cases where an individual sued the city because water contamination and it caused harm to his family. Boom. AI's like, boom, 5 court cases, very relevant. Maybe it saved that attorney 20, 40, 100 hours of research. That's value. I
Yep.
agree. I agree. So we'll follow that along. We'll follow. I think it'd be healthy to have those conversations, and it'd be really productive for these pockets to be showcased, but also the failure to be showcased. It's like, hey, we tried AI for, name the use case, and it was a miserable failure
Yeah.
because A, B, and C. And and then the positives. Hey, the legal profession's using AI very productively, and the reasons for it are A, B, and C, and here's the value they're getting. I think all that's positive. But I think generally AI's, with the exception of some pockets, just going to take longer. It's it's very hard to change human behavior, and we'll see. We'll see how that gets there. But we'll see. All right, so we are seeing the sell-off continue. We got NVIDIA down 3.3%. Meta's down about the same amount as down yesterday. Amazon's down about the same amount. And Palantir's down about the same amount. They were down 9% yesterday. Wow, Palantir's down quite a bit. Now, Palantir is having a phenomenal couple years, so I don't think we need to be overly concerned about it, but it's down 23% since the 12th. Interesting, but up 343% in the 1 year. So no big problem there. All right. All right, let's wrap up the show. Everybody, do me a big favor, and if you haven't done so already, please visit Daryl's channel and please subscribe to his channel. I'd appreciate that very much. And I'll be streaming again with Daryl as often as he's available, and we can kind of make this happen because I really like this format. I get a lot out of it. I'm hoping that everybody who attended got a lot out of it. It gives you a more complete picture on a stock, looking at it from multiple perspectives. And Justin, thanks for the question. It looks like we're going to be streaming Wednesdays about the same time. And then tomorrow morning, I'm available. I don't know if Daryl's available tomorrow morning. We may stream at the same time. Tonight, I'm going to stream at 6 p.m. Eastern, if you're interested in that. And then tomorrow, I'm going to stream at 8 p.m. Eastern. And if you can join, that'd be great. So anyway, Daryl, thanks so much for.
Thank you, Victor. I appreciate the opportunity as always. And thanks to everyone for joining. Appreciate the comments.
Yeah, it was a really, really good session. And we will reconvene when you have time. I have time, and have another one. Okay, everybody, sounds great. Good luck out there. Keep your wits and let's invest wisely as we have this sell-off. Exactly. Thanks, everyone.